Welcome to today's market SITREP. Matt Buckley, call sign Whiz, the primary and weekly options model portfolio manager here at TGO. And really looks like central banks around the world are giving the markets a scare. Obviously, yesterday, markets got a little creeped out that the Bank of Japan, more or less, sitting on their hands, right? The previous day saw some great GDP numbers come out of Japan, and the market rallied, like you read about in Japan Rally magazine. And then the next day, the central bank essentially said, hey, looks like things are going pretty good here. We're going to sit on our hands a little bit here, and the market freaked, which made us freak, which sent tremors around the world. And it doesn't help that over in Turkey that we're seeing a bunch of protesters and anti-government demonstrations. So a lot of stuff swirling together in the markets yesterday to bring us a triple-digit decline, recovery since it was Tuesday. The market's got to go up, and then it sell off again later in the afternoon. Now, we're going to see an update today, a little bit of a relief rally, but the question remains, folks, is when. It's not a matter of if, but when the Fed is going to end its quantitative easing, and another W that's just as important, why? Why is the Fed going to end its quantitative easing? Is it because the economy is doing better and we're going to have a nice smooth handoff, between the economy and the markets? Or is the Fed going to end it just because they're starting to recognize that they're creating, for lack of a better word, a bunch of crack addicts, making the stock market dependent on Fed policy? Or are they just going to end it for technical reasons, right? Are they floating a trial balloon right now, doing some stealth tapering? And all of this, folks, is creating volatility, which, if you're not an options trader, might creep you out. But as an options trader, gotta love this. This is a target-rich environment. We love volatility. We love uncertainty. We saw the VIX trade in about $1.14 range, which is ginormous in the VIX. Saw it up about 9.5%, then only up about 3.5%, only to end the day back up about 9.5%. So love the uncertainty as an options trader, and if you have a headache, you're probably not doing trading this market right. Today, not seeing too much on the flight schedule. We're going to, see some budget numbers yawn. We already know we're $17 trillion in debt, going deeper in debt, and we're in a ginormous hole that President Obama really doesn't care to dig us out of. He actually plans to keep on digging. Thursday, we're going to markets. Obviously, we had not that much macroeconomic data coming out Monday, Tuesday, and Wednesday, so the markets do look around the world. Comedy Central yesterday, CNBC, kept having the breaking news thing flash up with, I'm like, okay, what happened? Something horrible? Riots in Turkey. Okay, on a slow news day, folks, understand that the markets are going to react to just anything that's going on and grab a straw. But know that Thursday we're going to start getting a look at the retailer and obviously weekly unemployment claims, but also import prices and business inventories as well. And then Friday, definitely a market-moving day with a PPI, an inflation indicator, the cap utilization rate, industrial production, and University of Michigan consumer sentiment. So know that we're going to be all over the place until Thursday and Friday. But again, folks, really the question is, are you going to have a chair when this music stops? When the central banks around the world start or stop playing the music, are you going to have a chair to sit on? I know here at Top Gun Options, we're hedged, whether it's with volatility, precious metals, oil, and we're ready for any scenario, right? Trading's combat. Trading is a form of combat, and we always contingency planned before we went on any mission. So if you're just sitting here saying, the market can only go up because the Fed keeps playing their music, you're going to get shellacked. Okay. Also yesterday we saw money flowing out of emerging markets, right? Brazil getting shellacked, China. We talked about Japan recently as well, and we're starting to see treasuries, short-term treasuries in the U.S. start to rise a little bit as the world's getting a little creeped out. So everybody thought everything was great and getting better. and just hang on a second. So again, this is awesome. I love what's going on in the market because it's volatility. If you're having a little bit of an issue trading this market and you're doing it solo, I really wish you luck because you're going to need it. Okay, I got to run because I got some live trading to do here coming up at Top Gun Options and also at Wealth Creation Investing. So got a busy day ahead of me and sending out trade alerts to all of our subscribers. So happy hunting. Make sure you hedge, and I'll be back with Thursday's SITREP with all that critical economic data, and we'll see which way the market decides to go, whether good news is good news and bad news is bad news, or we're still in Bizzarro Market. I think Bizzarro Market is starting to kind of sort of get ready to end here, and can't wait because I want to get back to real market. Okay, got to run. Happy hunting. Make sure you hedge, and I'll see you tomorrow.